Welcome everyone to Pete's Investing. We review the weekly progress of some key share market world indices and gold. Again, these are reviewed every week. We publish this video on the weekend after the week's close. In this week's summary, we're looking at consistency of our results. We're doing quite well in our returns. We first go to our table of results so far. Again, we look at 15-minute charts over a rolling 5-month period, and over the 5 months, it's generated our trades on these indices is returned just over $10,000, which is about $2,000 on average a month. This is the drawdown on each of those indices and the buy and sell strategy returning these amounts. I'll explain what the chart looks like and how to read the charts. So again, we look at a 15-minute chart over roughly a 5-month horizon. So the way you read this is our profitability chart. And as you can see here, for the ASX Australian market, it's generated just about 3,149 Aussie dollars since the open back here late January, early February. This is the CCI indicator, and we're using a CCI 100. That's the black line, and the red line is a moving average 20 of the CCI 100. And then down here is the price chart. That's where we open on the week. As you can see here for the ASX, it's gone pretty much, it's consolidated in pretty much a flat trend. It's still below this key resistance area. So no real returns on this one, although it's been very steady after a very late drop late last week. You can see here the price of the entries were made at this high point there. That's where we entered 5 contracts. That's what that illustrates. So we're down on our profitability from that point. Now let's look at the US market. As you can see here, after opening up at this point down here for the week, the trade has been open now for a couple of weeks now, opened back here. Our profitability has taken a dip late last week at this point because of the price drop there, but then it's accelerated past this support line there, and it's been going upwards till the end of the week. So our profitability is looking quite good. So $2,700 has been made for the week. For the 5 months. As you can see there, the CCI has broken up above that zero line and is coming back down a bit, but our price is still going up. So there could be a divergence occurring late last week, beginning moving forward. Next, we look at Germany. As you can see here for the week, it's pretty much very similar to the ASX market. It's after a late drop last week, it's gone pretty much flat for the whole week, and it's bouncing between that resistance line and that support line. But there have been no added positions other than the 5 that were added a couple of weeks ago back here. Next, we look at the FTSE. This has performed a little better. It's broken past this support line or resistance line, and it's approaching this secondary resistance area up here. So that's looking okay, looking promising. Although we've still only got 5 positions opened, hasn't accumulated any more positions. Next, we look at China. Of our results for the 5 months, this is the one that's given us the negative result so far. As you can see here, our baseline of 100,000 is broken down after opening back a few weeks now, actually a few months, at this high at the peak there, and the Chinese market has dropped off quite a bit. It's making some little recovery now and approaching this level here. It has added 2 extra positions, so we've got a total of 15 contracts trading at the moment, and again for each of these trades we're trading 5 contracts at a time. So every time it enters 5 contracts. So we're doing 15 contracts now. So it's coming back towards our $100,000 baseline. So you can see here, back here, it started at 0. It broke above there when it did go up there, up the 100,000, and it's dropped down below. So that's the only one that's been performing in the negative so far of our trades. But for the week, it's looking promising. So if it needs to break above these resistance lines to show more promise and approaching our $100,000 baseline. Lastly, let's look at gold. 5 contracts open for gold. This has been very flat for the week. Very little movement. As you can see here, it's been held now for about 4 weeks after opening back here. It added to the position late last week, down here. So now we're trading 10 contracts. And again, I suggest you refer to our simple trading strategy video, which explains the actual strategy and the entry points of where we enter multiple average down processes. So just going back to the this is our playlist. We review the share prices each week, the indices, which is what we're looking at today. We also discuss our strategies, and our strategies in these videos is the process we're using to trade. Again, going back to the our summary chart. Don't forget, we're trading 5 contracts for each of these each time we enter the trade, but each of these contracts has got a different margin requirement. As you can see here, per 1 contract, it's $88 required for each contract. So multiply these by 5. China with the largest margin requirement. As you can, so we need to be mindful of that as we enter these trades with our money management process. Again, refer to our money management video to better understand how best to allocate funds and what margins and how many contracts you should enter into this. But we're simply using 5 contracts as a steady constant for each of these, just so we're producing these charts based on 5 contracts each. Okay, that's our indices review for the week. We'll speak to you guys next week in next week's update. But again, we're performing just about $2,000 a month on average. Thank you, and speak to you next week.